Saturday, January 9th, 2021, Maneco 64, home of alternative economics and contrarian views. So today I want to talk about holding on to your gold and silver for dear life. It's a part 4. I've been doing these videos since April 2018. Hold on to your gold and silver for dear life. That was part 1. The latest one I did was on November 14th, 2020. Very shocking moves we've seen in gold from Wednesday up until yesterday. Before I go on to the precious metals manipulation, I want to say that I've deactivated my Twitter account. I had almost 3,500 followers there. I've been on Parler for a while. Don't have that many followers there, but that's where I'm going to focus right now. And why did I do that? Well, I think Twitter is getting highly political. Yes, they say they're a private company. They can do anything. But British Telecom, or BT, they're a private company. They provide me a phone. I can call anyone I want, and I can talk about anything I want on the telephone. And I think that's the way all these social media platforms should be. Should I cancel my YouTube account? Well, that's something I need to look into. For me, it's still very important, and my following is growing on YouTube. I guess it might sound hypocritical, but I need to keep sending my message out. I haven't been censored on YouTube. None of my videos have been deleted, mainly because I follow the markets. I try to expose the really corrupt monetary and financial system that we're under. And that's what I do. And they've allowed me to do that. So I'm going to keep doing it. I am, of course, on other platforms like BitChute, Hive, Library, DTube as well. And I'm going to look into maybe also creating or putting some of my videos on the maneco64.net blog. I posted an article there yesterday, of course. I have a really good article there from June about the World Economic Forum and the Great Reset. Yes, June last year, I was already covering that. It's got like 10,000 reads almost. So I need to look into things, maybe change things around, but I'd have to be able to create some kind of revenue if I eventually leave YouTube. YouTube is still a very good source of new followers, and I don't want to stop that right now. But back to the precious metals market. Hold on for dear life. Why do I say that? Well, because there are a lot of forces at play in the precious metals bull market. And one of the biggest ones is the paper market, which is run from the COMEX, which used to be based in New York, the Commodities Exchange in New York. It's still there technically, but now it's owned by the CME. CME used to be a smaller exchange. It was just the Commodities Exchange in Chicago Mercantile Exchange. And then they bought, it seems, every other exchange in the world. They even bought the Chicago Board of Trade Exchange. They bought the COMEX, the NYMEX. NYMEX is part of COMEX. And yes, it's become a juggernaut. The other thing, because I worked as a futures broker for 20 years, and I started out in the early 90s. Before that, I was a bond broker, government bond broker for a few years. I started out, of course, at a small private bank in Switzerland in 1989. But in the early 90s, the firm that I started working for in London was called Gerard and National Intercommodities, or GNI. It was probably the biggest broker in London, English broker, really, homegrown broker. And we had seats on all the different exchanges around the world. And that's how it worked. I could have tried to buy a seat myself on comex or CBOT, as long as you have the cash to buy the seat. But unfortunately, with time, all these exchanges went public, and I think these exchanges now are basically owned by the big financial institutions, unfortunately. But I remember later on in the 2000s, when I started following gold, I got quite involved with the gold market on a private basis. One of my colleagues, we got one of his big clients to start dealing in gold and silver on comex. So I was also getting calls from a reporter at Bloomberg in London, and she was very nice. I'm not going to give names here, but she used to call me when things moved around in gold and silver to see what I thought. And I would always tell her, you need to look into the manipulation by the bullion banks. And she said, yes, it does look suspect. And we went out for a coffee to have a chat. And she said, I can't really cover that. And she was a very nice lady, actually. And she was American. I'm not sure if she's still there. But you see, you could tell her, try to tell her to look into it. But that's how it goes. And so lately, in the last 3 days, since Wednesday, we're seeing a lot of headlines and stories saying that gold has gone down and silver because of a spike in interest rates or in yields, in the 10-year yield. But as I said a few days ago in one of my videos, the 10-year yield was around 0.5, even lower, when gold and everything crashed back in March of 2020. We're now at 112, the 10-year yield, more than doubled. And the gold price up until Wednesday morning London, I think it was at 10 a.m. London or 5 a.m. New York on Wednesday, that they started attacking gold and silver on the comex. And how do they do that? Well, they just sell paper contracts. They're not selling real gold. I would venture to say that most of the bullion dealers, the people who deal for these people, they probably never held a gold bar or a gold coin. They don't know what gold is. They wouldn't know it if it hit them in the face. So why do they start doing that? Well, why do they start dumping the paper? And the other thing they do, and you need to read on King World News as well, there's a small piece from January 8th, from yesterday, Alistair McLeod explaining the open interest in the futures and how the big bullion banks were desperate because they were heavily short up until Wednesday. And you had a confirmation that Georgia had gone blue, right? You had commodities rising. You had the yields going up. And up until around 10 a.m., when the 10-year yield was already up from below 1% to around 105, gold was at 1960. It was going up as well. So they had a problem. And so they had to do something about it. And what happens when they start selling these paper contracts? Like yesterday, I noted after I made my video, because when I made my video, gold was at 1905. After that, I saw that gold was heavily hit. And in 1 minute, the price went from 1905 to 1875 in 1 minute. And I did an interview with Rafi Farber yesterday afternoon, and I recommend you watch that if you haven't yet. I'll put it up in the cards and in the description. He noted that he looked at the data, it was about 7,000 contracts. So do they have that gold? No. But what that does as well, is that it triggers stops. So the people who have long positions, which usually are hedge funds or CTAs, manage money, they trigger their stops. So these people are not really holding real gold. They're just speculating in the price. But it's become so speculative and so leveraged that it moves the price. So that's what they did on Wednesday. They drove gold from 1960 all the way to 1900, and then gold picked back up the last couple of days. It was holding on around 1905, 1910 yesterday. But again, they had to smash it down. President-elect Biden said he was going to spend $4 trillion new infrastructure. Goldman Sachs was saying that there's going to be another $750 billion stimulus next month. Biden was saying he wanted another $2,000 check. I mean, nothing's changed. The only thing that's changed is this paper price of gold. So back to my contact at Bloomberg, the reporter. So I bet you what happened this week, all these reporters from Bloomberg or wherever were calling the bullion desks or people that are in the gold market. And the excuse they gave was, oh yeah, yields are going up. But if you don't believe me, watch my video from a couple of days ago. I'll put it up in the description, or I'll put it down in the description as well. And you can see that gold was falling the yields higher. And anyway, since March or April last year, gold has gone up from 1450 all the way to 1900, while the yield went from 50 basis points to 1%. So it doesn't really follow that gold went down because of that. You wouldn't expect someone on a bullion desk to tell a reporter at Bloomberg, wow, gold went down because we smashed it on Wednesday and yesterday to try to rattle the longs, to try to cover ourselves because we have 320,000 net short position to bullion banks, and we've got all this fiscal policy coming down the pike. We've got the Fed saying they're going to keep rates at zero at least until 2024. The latest from, not the latest, but I remember Powell saying we're not even thinking of raising interest rates. Yes, they're coming out with this taper thing, but I think that's management of perception. They're just trying to slow things down. So yes, it's tough. I've been at this game, and what's the game? Well, it's trying to protect my savings through gold and silver, physical. And it's hard because we get these moves that shouldn't really happen. And you watch the other markets, for example, like the CRB index, that's continued to go up. If you look at the daily chart here, we are at multi-year highs now, the CRB. We are at 173. So why has gold and silver gone down so much? Well, because of the manipulation. I think it will be short-lived. The bullion banks or the commercials, they're going to use this opportunity to short cover. And I think the political instability, not only in the United States, but everywhere around the world, I think people are getting fed up with what's going on with these lockdowns. And in a situation like that, the political instability, all the debt, the economy is really not working. There's nothing going on. I mean, we've been told here that we're going to be locked down to April. If Biden comes in on the 20th, it's going to get worse for Americans. I think he's going to follow more the European path, the socialist path. And yeah, do you really want to finance the people in power? And I always ask myself that when I get kind of rattled. I was a bit shocked about the price move yesterday, but I've become so immune to it, pun intended, that I've got a few thoughts that I have. Do I really want to finance these people who are doing this? And why do I say financing? Well, because if I were to sell or exchange really my physical gold and silver for fiat currency and leaving it in the bank, the fiat currency, it's not my fiat currency anymore. It's an unsecured loan. And I'd be financing the people who are orchestrating all this mayhem in the markets, in the economy. So it's a matter of principle as well. And you need to look at it, of course, as something that will keep you going, survival, precious metals. It's not even about the profits anymore, because I think when the dollar goes, there will be no price for gold and silver. So, but you will be able to exchange it for anything you want. And that's how it works. Why did Rome fall? Well, because the legions would not accept the coins that were totally debased. They wanted silver. Legionnaires, they accept silver, especially gold. So that's what I have to say about that. Yes, it's frustrating, especially looking at other things going higher. And I'm not going to touch upon that right now, maybe later. So yes, hold on to your physical gold and silver for dear life. Yes, my mining stocks went down yesterday, but what did I do? I added some some more to it. I had a little bit of spare fiat currency, so I bought some more yesterday, accumulated a little bit more. And don't get me wrong, I'm not a fan of Warren Buffett, but one thing he said that is correct is that you want to buy things that you like when they're cheap. So there you go. At least it's an opportunity for us to go out there. And I would venture to say that if you try to buy some physical gold and silver right now, it will be actually pretty expensive compared to the spot price or the paper price that we see. There will be a premium, and I'm not sure how much more time we have to buy physical gold and silver. And what do I mean by that? Well, with all the draconian rules that are coming online here in the UK, and I expect them to be the same everywhere because it's a global plan. I'm not sure we'll be able to buy gold and silver physical, at least, as easily as we can now with all the lockdowns and the restrictions. So I think the window is closing. And of course, I'm not here to push people to buy gold and silver. I'm just here to give my opinion. And people have asked me, people who haven't bought gold and silver, where can I do it? And I tell them, do your homework, Google. Where can I buy gold and silver, bullion dealer? And right now, of course, it's difficult because you can't go to a shop, or if you don't know the people, you don't want to go online. I have a promo code with Gold Investments. And I trust them because I've been dealing with the Temple family since 2002. So, and the promo code is maneco64. You get a slight discount off the offer price. And yes, they will deal in the UK, but they'll deal anywhere in the world as well. They'll ship anywhere in the world. You just need to check the costs and everything. So, and the other alternative that I have, a referral code, is with Glint. Glint, I would say, is a little bit riskier than buying physical gold and silver. And why is that? Well, because there is a counterparty risk. Someone's holding your gold in Switzerland, but it also gives you the convenience of spending that gold through a MasterCard, right? My referral is Mario Glint 79 if you're interested. To store it properly, you might have counterparty risk too if you store it with someone else. Your physical Glint, of course, there is counterparty risk, and the storage is in another country unless you're in Switzerland. So that's it. So don't forget, I'm not on Twitter anymore. If you want to follow what I'm thinking, what I tweet, or I won't tweet anymore, it's an Echo, I think, or a Parler. Go to Parler, open an account there. I think a lot of people are going to be moving there. So anyway, tomorrow, of course, is Sunday. I'll be doing my normal live stream. And I wish you all a great weekend. Take care. Bye.